In this video, we're going to go over Chapter 3, the flow of costs in the manufacturing environment. In Chapter 3, and also in real life, you'll have the following information to work with. So first, you'll have all of your beginning inventories. They're going to come from your trial balance or your balance sheet, as raw materials, work in process, and finished goods are all assets and have to be reported on the balance sheet. So for this example, our beginning raw materials inventory, 7,000, work in process, 30,000, and no finished goods. Now, for the activity during the month. During the month, we purchased 60,000 of raw materials. We explained requisitions in Chapter 2, Job Order Costing Environment. Whenever we take materials out of the raw materials storeroom, it's called a requisition. And we note whether it's going to a particular job or whether it's indirect materials and it's going to overhead. So of our 52,000 of requisitions, 50,000 were direct and $2,000 were indirect. Next, we incurred manufacturing labor during the month. Direct labor, workers on the line, 60,000. Indirect, supervisory, cleaning up, that type of thing, 15,000. We also talked in last chapter that in a normal costing system, we're going to use applied or estimated overhead. So our overhead application rate is $6 per machine hour, and we had 15,000 machine hours during the month. During the month, we incurred the following actual overhead costs. Remember, all overhead costs are plant. They're related to production. And then we have the following selling and administrative expenses, which are period expenses. So the first thing that I'm going to do is I'm going to use my three-door analogy to explain the flow of costs. Then we're going to use our formulas. Then we're going to use our schedule. We're going to prepare a schedule of cost of goods manufactured and then sold. And then finally, we can move on to the income statement and the journal entries. So first, let's understand the flow of costs. So what I like to think of the flow of costs in a manufacturing system, I like to use what I call a three-door analogy. So we're going to look at door number 1, door number 2, and door number 3. And I'll make them look a little bit more like doors in a moment. So here's our door number 1, and here's our door number 2, and here's our door number 3. So our door number 1 is going to be our first inventory, our raw materials inventory. And I want you to think of it more as the raw materials storeroom. The second room is our work in process. But what I want you to think about that is the manufacturing floor. That's where all of the processing is going to take place. And finally, the third room is our finished goods inventory. But I want you to think of that as either the storeroom or the showroom. Showroom is better, but sometimes we store our finished goods as well. So let's look at how costs are going to actually flow during the month. So the first thing that's going to happen is that we have beginning inventories in each one of these storerooms. So we talked about that before. we come in at the beginning of the month and there's 7,000 raw materials in the raw materials storeroom. There's 30,000 of goods in work in process, and actually there's 0 in finished goods. So let's put that in here. So in each case, we're going to have our beginning inventory, and our beginning inventory. So it's going to kind of look like that when we come in. Now, the first thing that's going to happen is we're going to purchase some raw materials. So a purchase of raw materials is going to add to our raw materials inventory, or it's going to add to our raw materials storeroom. So when we purchase raw materials, the only thing that's going to happen is we're going to have more raw materials. Now, in our manufacturing environment, we don't want the raw materials just sitting there doing nothing. So the next thing that's going to happen is we're going to requisition those raw materials. So what happens is when we requisition those raw materials, we're going to take them from the raw materials inventory or the raw materials storeroom and move them on to the manufacturing floor. So requisitions of raw materials is going to increase the work in process. So what's going to happen is our requisitions of raw materials are going to decrease the raw materials inventory because we're taking them from the raw materials inventory, and they're going to increase the work in process. So all our requisitions are going to do is transfer the materials from one to the other, although our indirect are going to go through a third inventory, manufacturing overhead. Now, the next thing that's going to happen is we have to apply what is known as labor and overhead in room 2, because if the materials just sit there in room 2, nothing is going to happen to them. So what we're going to do next is we're going to add direct labor, and we're going to add overhead. So in room 2 in our manufacturing floor, we're going to start off with the beginning inventory. We're going to move over our requisitions of materials. Once we have the materials in place, we're going to add labor and we're going to add overhead. Now, we don't want things sitting in the manufacturing floor. We don't want customers walking through the machines trying to figure out what's partially complete and what's complete. So once the materials are complete, what we're going to do is we're going to transfer them from room 2 to room 3. So that should have said requisitions of materials. So now let's look at the last part of the process. So in the final part of the process, once the goods are finished, we're actually going to move them from the manufacturing floor over to our finished goods storeroom or our finished goods showroom. So when we finish goods, they're going to decrease the work in process, but they're going to increase the finished goods. And finally, the final thing that we're going to do is we're actually going to sell. And sales just go off to the customer. We don't have it anymore. And then we just turn around and start the process all over again. So let's go through the formulas that we're going to need, and I'm going to put in the numbers from the given information to the left. Once I go through the formulas, all we have to do is rearrange them to do the schedules, and then the journal entries are going to be relatively easy once we have everything in place. So let's get going with our first formula. Our first formula is for our raw materials inventory. So what we're going to do is we're going to take our beginning inventory of raw materials. To that, we're going to add purchases of raw materials. We're going to subtract our requisitions of raw materials. And when we do all of that, that is going to equal our ending inventory in raw materials. So we're given all of the information. Our beginning inventory of raw materials is 7,000. We purchased 60,000 of raw materials, and we actually requisitioned 52,000. It includes both the direct and indirect. So we took 52,000 of materials out of the raw material storeroom. So now just adding that all up together, we can see now that our ending raw materials inventory is going to be $15,000. Now let's work on Schedule 2, which is going to be our work in process. And we're going to have to do a little bit of calculation. So for our work in process, Room 2, just like it says before, we're going to start off with our beginning balance. And work in process, that was given in the problem, is 30,000. To that, we're going to add our direct materials used in production. That's going to be our direct materials requisition. Then we're going to add our direct labor. And we're going to add our manufacturing overhead applied. Once we have all of those, when we add our direct materials, direct labor, and our manufacturing overhead to our beginning balance and work in process, we're going to have our total manufacturing costs. As you can see from the graphic above, from our work in process, we're going to subtract the goods that are finished. And I didn't write it down in the problem to the left, but in the problem we were told that one job was finished. Job A was finished at a cost of $158,000. So if we subtract those goods that are finished, we're going to come down to our ending work in process balance. So let's put in those numbers. We were given in the problem that our beginning work in process is 30,000. We have our direct materials requisition, we're given in the problem is 50,000. Our direct labor was also given in the problem is 60,000. And I'm going to put a little star after the manufacturing overhead applied. And it will calculate the manufacturing overhead applied below. What we're going to do is we're going to take our $6 per hour and we're going to multiply it by the 15,000 hours that were given in the problem, and that is going to be our manufacturing overhead applied. So 6 multiplied by 15,000 is going to give us 90,000 of manufacturing overhead applied. Now, in the problem, we were told that job A was finished during the month at a cost of $158,000. So we subtract the cost of the jobs that are finished, $158,000, and we should come down to our ending work in process, which is $72,000. Now we work on our final schedule, which is going to calculate our ending finished goods. So we can see over here that we start off with beginning finished goods, and 2 things are going to happen. First, our finished goods are going to be transferred in, and then when units are sold, the cost of the sale is going to be transferred out. So we have our beginning finished goods, which was given in the problem as 0. Then to that, we're going to add our units that have been finished. To that, we're going to subtract out our goods that are sold during the month. And then finally, when we do all that, we're going to come down to ending finished goods inventory. So we're told that our beginning finished goods was 0. From the last schedule, we're told that we finished $158,000 worth of materials. And we were told in the problem, I didn't write it down in the activity, but we were told in the problem that we sold 3/4 of the units that were finished, so the cost of goods sold was $118,500. So once we do that, we will now calculate our ending finished goods inventory. Which is $39,500. Now all we have to do is rearrange the schedules that we have up above into a proper schedule of cost of goods manufactured. So I'm going to scroll down here and prepare a proper schedule of cost of goods manufactured, and I'm actually going to need 3 columns for that. So I'm just going to make column B a little bit wider because I'm stuck with this column orientation. So for our schedule of cost of goods manufactured, the first thing that we're going to start off with is our beginning work in process inventory. And that's going to go in the 3rd column because we're actually going to have several supporting schedules. So our beginning work in process inventory, as you can see from right here, was $30,000. Now the first thing that we have to do is calculate our direct materials used. So we have to do that in kind of a roundabout way because we're actually given the raw materials used in production of $50,000, but we're going to have to go about it kind of in a strange way. So that $30,000, I'm sorry, should actually have been in the 3rd column. Now we're going to calculate the raw materials used in production. Actually, I'm sorry, the direct materials used in production. So to calculate our direct materials used in production, we're going to start off with our beginning raw materials inventory. Once again, that was given in the problem as $7,000. To that, we're going to add our purchases of raw materials. Which was given in the problem as $60,000. We can see the schedule right up above. From the purchases of raw materials, they have a subtotal of raw materials available for use. Now this is going to be strange. We're going to subtract the ending raw materials inventory, which we calculated up here as $15,000. And what we're also going to do is we're going to deduct the indirect materials used because they're going to be a part of the manufacturing overhead. So what that is going to do is come down to our first manufacturing cost, which is going to be our raw materials used in production. So in column 2, we're going to have our 3 manufacturing costs. So all I'm going to do is I'm going to sum up all the numbers on the left. Your book has a few subtotals, but I find them confusing. So notice we come down to the $50,000 of raw materials or direct materials used in production. That actually should say direct, I'm sorry, not raw. Direct materials used in production. Then to that we're going to add our direct labor, which is given in the problem as $60,000. And then to that we're going to add our manufacturing overhead applied. And that number is 90,000. Now what we're going to do is we're going to add the 3 together, and we're going to add all of our manufacturing costs added to production. Which is just the sum total of the direct materials, the direct labor, and the manufacturing overhead applied. So we have $200,000 of manufacturing overhead costs added to production. What we're going to do is we're going to subtract out our ending work in process inventory that we just calculated as $72,000. So our beginning work in process inventory, if we add the direct labor, the direct materials used, the direct labor, and the manufacturing overhead, and then subtract out the ending work in process, we come down to our finished goods, the goods that we finished during the month, which is also known as cost of goods manufactured. And we were told in the problem that we finished $158,000 worth of goods. So 30,000 plus 200 minus 72 gives us 158,000. And we now have our schedule of, that should say cost of goods manufactured, I'm sorry, not cost of goods sold. So we now have our schedule of cost of goods manufactured. We can now move on to our cost of goods sold as well and calculate that. Now on to an explanation of the overhead and how the overhead is applied, and then we're going to move on to our journal entries. So the way overhead works in a manufacturing environment, I'm now going to draw a T for the manufacturing overhead account. It's a bad T, but it's a T. I have my structure up above here, but I'm now going to draw my manufacturing overhead T. Now the way the manufacturing overhead account is going to work is our actual costs are going to be debited to manufacturing overhead, and our applied manufacturing overhead is going to be credited to the account. I'm going to go over the journal entries in just a moment. So if we scroll up a little bit, we can see over here all of our actual manufacturing overhead. So as we pay our utilities or as we incur our utilities, we're in a manufacturing environment. If they're utilities for the plant, we're not going to debit utilities expense. We're going to debit manufacturing overhead and credit cash or accounts payable. When we pay our rent or incur our rent, we're not going to debit rent expense. We're going to debit manufacturing overhead and credit cash or credit rent payable. Same thing with our repairs and maintenance. Instead of debiting repairs and maintenance expense, we're going to debit manufacturing overhead and we're going to credit accounts payable or cash. When we pay our property tax on the plant, we're going to, instead of debiting property tax expense, we're going to debit manufacturing overhead and credit property taxes payable. When we have our expired insurance, instead of debiting insurance expense, we're going to debit manufacturing overhead and credit prepaid insurance. And finally, when we incur depreciation on the plant or the plant equipment, instead of debiting depreciation expense, we are going to debit manufacturing overhead and credit accumulated depreciation. Now, when we apply manufacturing overhead, we're going to credit the account $90,000. And let's not forget, I'm going to scroll up, that we had our indirect raw materials. So when we requisition raw materials that are indirect, we're going to debit manufacturing overhead and credit raw materials inventory. And then we had another $15,000 of indirect manufacturing labor. So when we incur indirect labor, we're going to debit manufacturing overhead and credit either cash or salaries payable. So now I'm going to add up all of the actual manufacturing overhead costs, and we see we come up to $95,000 of actual manufacturing overhead, while our applied manufacturing overhead is $90,000. So what happened is our applied, this amount is the guess, so we guessed incorrectly, and actually we guessed too low. So what this is called is underapplied overhead. The manufacturing overhead account is going to have a $5,000 ending balance because we're going to increase it by 95 and decrease it by 90. So we're actually going to close that balance straight into cost of goods sold. So let's go on to our journal entries and let's finish up this chapter. So let's move on to our journal entries. So now I'm going to click on the tab that says Journal Entries. So you can see here that I set up several T accounts. So our beginning raw materials inventory, that is incorrect. Instead of 70,000, that should be 7,000. Our beginning work in process inventory is 30,000. Our beginning finished goods inventory is 0. And cost of goods sold being an expense, that beginning inventory is 0. So let's go through the journal entries that we have to do for the activity. We don't have to journalize all of our beginning inventories or our beginning balances because they're just in the T accounts when we get started. So for our purchases of raw materials, what we're going to do is we're going to debit our raw materials inventory and we're going to credit accounts payable. So that amount was 60,000 and the credit is 60,000. So I'm going to debit my raw materials inventory for 60,000 and credit my accounts payable for 60,000. The next thing that we're going to do is we're going to requisition $50,000 of direct materials. So to requisition direct materials, we're going to debit work in process inventory for the amount of the requisition, 50,000, and we're going to credit raw materials inventory. So I'm going to post that one. So we're going to debit our work in process inventory for 50,000 and credit raw materials inventory for the 50,000. Now for the requisition of indirect materials, instead of debiting work in process, what we're going to do is we're going to debit manufacturing overhead for the 2,000, and we're going to credit our raw materials inventory. So to post that, we have the $2,000 debit to manufacturing overhead and the $2,000 credit to our raw materials inventory. The next thing that we're going to have to journalize is our labor. So the first thing that we're going to have is our direct labor, and then we're going to have our indirect labor. So for direct labor, we're going to debit work in process inventory for 50,000. I'm sorry, that was 60,000 of our manufacturing labor. I'm sorry, 60,000. And the credit is going to be to salaries payable. I don't have a T account up for salaries payable. I can put another one up for salaries payable. Thought I had all of my accounts up. So we have another account here for salaries payable. And we have 60,000 on the credit side. Now we're going to do the same thing for the indirect labor, but instead of debiting work in process directly, we're going to debit manufacturing overhead. But first I need to post the debit to work in process inventory of 60,000, which I neglected to do. So I have my debit to work in process of 60,000 and my credit of 60,000. The next thing that we're going to work on is the indirect labor. So for the indirect labor, we're going to debit manufacturing overhead for the amount of the indirect labor, which is 15,000. And we're going to credit the same salaries payable because they are salaries. Next, we're going to move on to our manufacturing overhead applied. Notice I'm basically going down the list of the activity. So we've got our purchases of raw materials, requisitions of raw materials. We've journalized the manufacturing labor. Now we have to journalize our manufacturing overhead, first the applied, and then the actual overhead, and then our selling and administrative expenses are just going to be journalized as straight expenses like you learned in Accounting 1. So I won't go over those. So let's move on to the overhead applied. You remember the amount was 90,000, which was 6 multiplied by 15,000. So for the overhead applied, we're going to debit the work in process for the 90,000 and credit our manufacturing overhead. So we have a debit to work in process of 90,000 and a credit to our manufacturing overhead of 90,000. Now 2 more things are going to happen before I finish with the actual overhead. The first thing that's going to happen is we have to journalize our goods that are finished. So for the goods that are finished, we're going to debit finished goods inventory, and we're going to credit work in process. So we're told in the problem that $158,000 of goods were finished. So we're going to debit finished goods and credit work in process for $158,000. And finally, we have to journalize our goods that are sold. So notice we have $118,500 cost of goods sold. So for the goods sold, we're going to debit cost of goods sold. And that debit is going to be for the $118,500. And we're going to credit our finished goods inventory because we sell them out of the storeroom. So I'm going to debit my cost of goods sold, $118,500, and credit my finished goods inventory, $118,500. Then finally, we only have the actual manufacturing overhead. So as I said, when we incur actual overhead, we're just going to debit manufacturing overhead. So for the utilities, we're going to debit manufacturing overhead for $21,000 and credit accounts payable. For the next one we have, which is our rent, we're going to debit manufacturing overhead and credit accounts payable. So that amount was $16,000. For our repairs and maintenance, we're going to debit manufacturing overhead for the $3,000 and credit accounts payable. So this is happening during the year when we're incurring all of our manufacturing overhead. The next one we have is the property tax on the plant. So for that, we're going to debit manufacturing overhead for $13,000. And the book had property tax payable, but I'm just going to use the general accounts payable here, so I don't have to open up another T account. Now for the last two, we have expired insurance. So for the expired insurance, instead of debiting insurance expense, we're going to debit manufacturing overhead, and that amount is going to be the $7,000. And we're going to credit our prepaid insurance. And finally, for our depreciation, instead of debiting depreciation expense because it's overhead, we're going to debit manufacturing overhead for the $18,000 and credit accumulated depreciation. So I'm just going to post those journal entries. So for the utilities, manufacturing overhead, and accounts payable. For the rent, manufacturing overhead, and accounts payable. For the repairs and maintenance, manufacturing overhead, and accounts payable. For the property tax, manufacturing overhead, and accounts payable. For the expired insurance, debit manufacturing overhead, credit prepaid insurance. And finally, for the depreciation, debit manufacturing overhead, and credit accumulated depreciation. Now let's look at the ending balances in each one of the accounts. So for raw materials inventory, I start with 7, add 60, subtract 50,000, and subtract 2,000. And I come down to 15,000 in my ending raw materials inventory. I'll color that in yellow so you don't confuse that with a posting. And notice we did come down to our ending raw materials inventory as 15,000. So moving on for our work in process, we're going to start off with 30, add 50,000, 60,000, 90,000, and subtract 158,000. So we notice that we now have 72,000 in work in process, which matches the other worksheet. For finished goods, we're going to increase it by 58 and decrease it by 118,500. So we have 39,500 in finished goods inventory. And finally, cost of goods sold for right now has a balance of 118,500. But the last thing we're going to have to do is close our manufacturing overhead. So for manufacturing overhead, we're going to increase it by 2,000, 15, 21, 16, 3, 13, 7, and 18,000. And then decrease it by 90,000. So you're going to notice that we have a $5,000 debit balance in manufacturing overhead. I'm not going to color that yellow right now. In fact, I'm going to get rid of that balance in a moment. For our accounts payable and prepaid insurance, we don't really need those balances. Now, the final step in the process is to close manufacturing overhead into cost of goods sold. Although, if manufacturing overhead, if that ending balance was large, we would close it to work in process, finished goods, and cost of goods sold based on their relative balances. So it's just a cost allocation. So now to close the manufacturing overhead into cost of goods sold, because manufacturing overhead has a debit balance, we're going to need to credit it. So we're going to debit cost of goods sold and credit on manufacturing overhead. For the 5,000. Because our costs were 5,000 higher than we anticipated. So I'm going to get rid of this intermediate balance. We are going to credit manufacturing overhead for 5,000 and debit cost of goods sold for 5,000. Notice now we're going to increase manufacturing overhead by 2, 15, 21, 16,000, 3, 13, 7, and 18. But now, after our final closing entry, we're going to decrease it by 90 and decrease it by 5,000. So notice that manufacturing overhead is now 0, and we now have a cost of goods sold of 118,500 plus 5,000, which is 123,500. So these three yellow balances, raw materials, work in process, and finished goods, are going to go on the balance sheet, and cost of goods sold is going to go on the income statement.